Hello friends, in this video I will talk about intraday trading such as what is intraday trading, things which are crucial for intraday trading and how to select stocks for intraday trading. We have also prepared a watch list with the same method which we will discuss ahead in this video. The list includes some of the highly traded stocks such as Axis Bank, Bajaj Finance, Bharti Airtel, ICICI Bank and some other highly traded stocks. Let's have a brief intro about intraday trading. Intraday trading means buying and selling of shares or other trading instruments such as future or option contracts on stocks, commodity or currency on the same day to benefit from its price movements during the day. For example, a trader has a bullish view on the market for the day. If he is right and wants to make money on this idea, he will buy Nifty future on the NSE exchange and will expect to sell it for a profit if Nifty rallies. This way, he will make money by taking intraday leverage using future contracts, which require only 10 to 15% margin. In short, a trader closes all trades before closing of the trading session and does not carry any overnight risk which can impact his profits. In India, Nifty and Bank Nifty indices account for the largest intraday trading volumes as they are tracked all over the world by big market participants. Now, why do intraday trading? These are the top factors that account for the surge in intraday trading volumes all over the world. Leverage is one of the top reasons for intraday trading. A trader may increase his profits multifold using intraday leverage if he gets it right. He can trade in top liquid stocks just by having one-tenth of the trade value in his trading account. Brokers also offer increased leverage facilities in derivatives trading also. No overnight risk is the other advantage that intraday traders enjoy. As intraday traders close all the open position before the closing of the market, they can sleep peacefully in the night, even if some big event take place in any corner of the world which might impact financial markets adversely. An intraday trade may last from 5 seconds to 4 hours. Sometimes, a trader may make multiple trades on any day as opportunities keep coming in the market and sometimes exit with minor or big losses to move on to other trading ideas. As well as intraday traders can ride the market moves in both the directions. Things to keep in mind while doing intraday trading. Though there is no overnight risk for intraday trading, there are other risks such as unexpected news impacting the market adversely, illiquidity in certain trading instruments, and fluctuating volatility. In intraday trading, profits and losses affect human psychology to a great extent. Thus, all important steps to be taken to eliminate emotions out of the trading. For example, if a trader has seen a long streak of profits or a big profit, he might take a huge risk on the next trade by taking oversized position due to overconfidence. Or if he has recently witnessed a series of losses, he may avoid a right trading setup or may exit his profit making trade prematurely in the fear of wiping it down. For intraday trading to be successful, traders need to take utmost care of two important things, which are liquidity and volatility. Liquidity means availability of the buyer or seller for the counter trade at all times. The higher the liquidity, the better it is as traders can enter and exit the stock as and when they want. Volatility means tendency of a stock's price movement. A stock's volatility can be high or low compared with the market or other stocks. Larger companies that have stable earnings have low volatility, and smaller companies or companies with volatile earnings may have high volatility. Volatility is an important component of intraday trading, as lower volatility may mean less profitable opportunities and higher than normal volatility may pose a risk of stop loss getting hit. These are the top stocks which are highly liquid as well as they have enough volatility so that traders can benefit from difference in entry and exit price. The pattern of volatility should not be seen in the context of particular day or week. Rather, stocks which have a history of volatile trading and highly traded have been selected as trading candidates. The given list of stocks have been prepared on the premise of higher liquidity and significant volatility to ensure smooth entry and exit without much slippages. Stocks which are highly traded on exchanges and have a history of wider price movement during the day have been included in this list. How to select stocks for intraday trading? As the liquidity and volatility of the stocks keep changing, the above list should not be treated as an ultimate watch list for intraday trading. In fact, the list should be updated frequently for ensuring an updated and adaptable trading environment. First of all, a table of top 100 or 200 market capitalized stocks is obtained with liquidity and volatility parameters. Average daily turnover can be used as liquidity filter and ATR% can be used as a volatility filter. Then top 20 or 30 stocks with the highest turnover in a descending order should be highlighted as per the requirement of how lengthy universe is to be selected. Similarly, stocks with the highest volatility over a period of time should be highlighted in the descending order, and then stocks which are common on both the categories can be selected for trading universe. The above list has been prepared by extensively analyzing the volatility and liquidity of the highly traded stocks on NSE BSE in the recent history. However, the volatility is varying in nature, thus the list given above is not the ultimate list, and their volatility's liquidity can keep changing over a period of time. Intraday trading is an active, stressful and a high risk job. It also involves risk of losing capital. Thank you.